So from the big picture, we're now going to look in more detail at some of the major geographies in Europe for private equity investment activity. And to start, I'm delighted to invite a formidable panel of Italian specialists to the stage under the leadership of Alessandra Becchi.
Hello. We have only 45 minutes to speak about Italy focus and Italian market outlook and perspective. And as Association of Private Equity, Venture Capital and Private Debt, IFI, we just presented last week the figures of first semester 22. There are very good news because there is a booming market on the investment side. We have 11 billion euro of amount invested. Certainly is pushed by the infrastructure deal, but we have also a growth of number of deals, 100 plus 140. Particularly early stage, okay. The role of CDP Venture Capital SGR is a catalytic role for the VC market, but also buyout. The sectors are ICT, manufacturer, all the made in Italy goods. And today we will speak, we have only a particular, but we will speak with our speakers, only the fundraising side, a slowdown, but I have the same of all around Europe. We try to explain the slowdown and to explain and to work together with the GPs to make closer limited partners and GPs in our market because we work together on that. And I present my speakers of today, Matteo Cirla, Managing Director, EG Private Equity, Raffaele De Courten, Founding Partners, Alto Partners, Anna Guglielmi, Managing Partner, Tangled Capital, Alessandro Matteo, Principal, Invest Industrial, and Arthur Bernardin, Partner, LBO France. I start with Matteo, Matteo Cirla. Allora, why Italy is the focus of the panel? And we try, what are the main strengths of Italian business environment? And can you give us some example of success stories or your experience?
Yeah. So good afternoon, everybody. Thank you for coming. My name is Matteo Cirla. I'm manager EG Private Equity together with my colleagues. Well, it's a broad question that, so trying to keep it simple and straight to the point. In our experience, the strength of our market belongs to the corporate structure, and I think that most of the people present here today has good knowledge of corporate structure. How many good export-driven corporates we do have in our market, and the story about their family ownership and the ability to export in the world and present good products with the capability of manufacturing those products even in Europe, not only in Italy, but essentially in developed countries. That's a story that everybody knows. The point that we have maybe less highlighted in the past discussion among this topic has been a couple of points. One, the flexibility. In such an environment like the one that we live today, our experience tells us that there are good managers, but also companies that are able to sail in rough conditions. Whether it's the energy cost, whether it was the pandemic in 2020, whether it was the raw material disruption from Far East in 2021, whether it will be, I don't know, you tell me, next year problem. At the end of the day, if you look at the rough numbers that IFI is presenting, the performance still is there. The portfolio companies in our portfolio are performing well. We have performance that are delivering not only in terms of exit values, but also in terms of not stretching the financial structure, not having too much. Doesn't mean that we don't have problems, but don't have too much problem. Then you have to focus on short-term decision instead of long-term value creation. So in our experience, I think that one of the main attractive points of Italy is a manufacturing country. Together with Germany, we retain a manufacturing capability, and we have this flexibility. We have people knowing how to handle different situations, even the one most unexpected. And that's something that we keep it in a short statement when we present our fund to our investors, saying we don't have a crystal ball. We were not able to forecast any of the major events in the last 5 years, and we will not be able to forecast the future 5 years. So we don't even try to do that. The only thing that we request to our management team, and to ourselves as well, is to be able to react quickly, as much as we can, to the unexpected event. And that is a combination of factors. Again, flexibility of people, the dimension of our investments. Corporate where we do invest are still small compared to many other markets. And that allows us, is a weak point from certain KPIs, but at the same time is a strength point, because it allows us to be a little bit more adaptable to the situation. So whenever people are getting closer to the Italian market, I think that the story is there are many opportunities, much more than in other markets, and there is a possibility to choose. And once you are able to choose well, there is a possibility to have very nice returns. That's why I'm here today, and that's why I love to do managing EG funds is not because we manage somebody else's money, because we invest our money. And that's, at the end of the real story. Then, of course, if you want to join us, more than welcome.
Perfect. Interesting. I find keywords flexibility is not a characteristic only of entrepreneurship, Italian entrepreneurship, but Italian people, I think. Flexibility is good. Raffaele, with you we can speak of fundraising side. As we mentioned before, we have a slowdown, but Italy has been always an attractive country for international funds. And what do we need in this moment to reverse this trend is also slowing down? And also, what is your experience with investors? It's difficult.
Well, I think when the Draghi government came into place, I think it was in February 21, there was a lot of enthusiasm all over the world, and that time is finished, unfortunately, and we're waiting for the 25 September election. We'll see what's going on. I think many of the Italian guys here know that, as Matteo mentioned, I mean, Italy, Northern Italy in particular, is extremely resilient to political cycles and also economic cycles. So I don't expect nothing terrible to happen, whatever will be the outcome of those elections. But I also understand that from a foreign investor perspective, a worsening of the macro scenario can generate fear. And I think it is up to us to convince those potential investors that that fear is, to a good extent, ungrounded, because if you have a sound strategy, a multi-annual discipline in doing certain deals in certain regions, in certain sectors, you will manage. It will take longer, but you will not use your capital, and you'll get a premium to your capital exposure, which actually is your job. Of course, there are investors who have a top-down approach, have the macro approach, and of course that is not beneficial to Italy, because it's so 30, 40 years, we used to have one government per year. Now we have maybe one government every 2 years, and that's not much the point, because it's the volatility of the political environment which scares investors. That I can agree, I can concur on that point. But if you look at returns, I don't think that the returns of the good Italian GPs are so worse than their peers in France, in Germany, in other peer countries. I don't think that. So I think it's a matter of trying to be more accountable, and I hope that the election of 25 September will be a positive response, even from parties who scare people today, and we're talking about the center-right or the extreme-right, whatever we can call them, but nobody will definitely, in my opinion, put at risk, the enormous amount of money that we need to get from Europe, and we need then to implement through public administration and policymakers.
Thank you, Raffaele. So we are resilient also entrepreneurship, and investors can trust in our economic system, in our entrepreneurs, we hope. Okay, Anna. Anna, always on the fundraising side, what are your feelings about relation with the Italian investors, particular investors, not only international, but also Italian investors? And we work together, GPs association, to make, we mentioned before, to make closer GPs and LPs. So.
Thank you, Alessandra. Of course, fundraising is always a tough moment for a fund, in particular for us that we are a first-time fund. So for sure, it has been a tough period because we set up our asset management company in 2019, and we did our first closing in December 2019. So when we start to look at the market, there were COVID and then the war and then so of course fundraising is always tough. But if we want to underline something positive about the Italian market, is that the role that the institutional Italian investors are playing in the private markets, I think is great, because the amount of assets that the Italian institutional investors that are managing has been increasing a lot since 2008. So basically, the increase of assets of our pension fund has been growth of 98%. So now they are managing, overall, I'm talking about pension fund, bank foundation, insurance company. They are basically managing something around 200 billion euros. That is 9.8% of Italian GDP. That is a very good amount of money. Of course, sometimes we complain a bit because they are allocating still very low to the private equity market. So basically, on average, the Italian institutional investors are allocating less than 10% on the private equity market. So they have been more focused in the past with real estate or traditional investments. But it's also true that in the past years, they have done a lot. In my experience, in our experiences, or in the experience of Entangled Capital, most of our fundraising have been done with Italian institutional investors, even if we are an emerging manager, because they have clear in mind that if we want to support our economy, we need to start to invest directly in small and medium enterprises. So our focus is on small, medium company with revenues around 50 million euros. That is the core of our industry. And yes, they are really doing a great work. So I think that even if in this first semester the fundraising has been below the past year, I think it's also understandable because most of them have been facing with some problem in the liquid market, and they have also some concentration limit that they have to respect. So I think the Italian market can grow for sure, thanks to the amount of money, the capital that the institutional investor can put in this market. And of course, we hope to attract more international investors.
Good, very good. So the interest is growing, and we are on the right way. We have to. Yes. Alessandro, we speak about investments, more investments from your point of view. Which sector are more attractive in this moment? And our Made in Italy, as maybe mentioned, is still resilient facing the international economic crisis, inflation growth. So good news.
Good news. So thanks for the question. As an introduction, my name is Alessandro Matteo. I'm a principal in Investindazione. I've been focusing in the Italian market for the last 20 years approximately. I think there have been always ups and downs. The moment that we're facing now, it's very peculiar, and then of course there are a lot of headwinds ahead of us. So all the GPs need to stay very focused and selective, and always try to source for primary or proprietary transaction that can always offer a bit of an edge. So for international investors that want to invest in Italy, which as Matteo rightly said before, it's the second largest manufacturing country in the world. It's an economy of the size of the California, so it's a very attractive market that you can still buy on average cheaper than the rest of Europe or the rest of the world, but always doing that through either local GPs or GPs that has a strong expertise on the local culture. That's always a big edge when you talk to Italian entrepreneur. But going to your question as a sector or made in Italy, we tend to look at sector that we know most. But more than sector, then of course now we slow down some of the cyclical activities like automotive or construction, these type of things, and we are focusing a bit more into food and healthcare that are more protected from inflation or growth path standpoint, but we tend to focus on global leader. And at the end of the day, global leader, no matter the economic time, they can always try to take advantage even more when there are headwinds from an economical standpoint. And we recently done a lot of investment in the food sector, for example. And then now that there are problems in terms of energy, inflation, we actually took the advantage to invest even more and expanding all the platform investment that we did. Zegna is a global brand. We invested in the last year, and it's actually gaining market share, and it's taking, again, not advantage, but it's benefiting from the situation. It's helping other companies that can be part of this platform. So we look at this moment actually with quite a relatively optimistic approach, because in bad moments in the economy, you can always find good opportunity for investment. Maybe fundraising side is more difficult, but investment side, you can find a bit more attractive multiples. And Made in Italy is probably one of the best brands in the world. So our economy is characterized by traditionally companies that are dedicated to export. For instance, in our portfolio, that we invest a lot in Italy. We invested more than 4 billion in the Italian market in the last years. But our companies has less than 15% revenue exposed to Italy. So it's more than 50% to US and 20% to Asia. So at the end of the day, we're talking about global leaders. And not only of the company, maybe of the size that we're investing, but generally it's really the Italian economy that is structured this way. So not really exposed political risk unless you do infrastructure or construction. But Italian companies are really edged from this type of risk traditionally. And for us, Italian GPs is actually, we see the next couple of years, it's a very good moment on the investment side.
Good, Alessandro. Yes, maybe it's the perfect private equity model to focus on the international players, also and among the entrepreneurs, and on the global players. So it's a good business model, I think. Anti-cycle. Yes. Arthur, your current investment focus, what is your current investment focus? And also, if you want to say something about difference about Italian market and French market, if you want.
Yes, of course. Well, since I spent 7 years on the French market from 2010 to 2017, and then I moved to Italy, it's quite easy for me to compare both markets. Thank you. So I'm a partner at LBO France. I arrived 5 years ago in Milan, so now I know all those people quite well, and I even speak Italian sometimes with a French accent. But when I go back to those kind of events in France, all people say, no, okay, Italian market is fantastic, there are great opportunities. It's the French market 20 years ago. So, no, it's not the French market 20 years ago. I must say it's a very different market. That's why investors need to invest in local GPs with a strong foothold in the Italian market because it's a completely different market. It's far less developed. So I agree with Matteo, of course. We all know the fact that there is a very strong manufacturing unit. So you have a lot of SMEs which are exporting, etc. All that, we know that. Probably a lot more agile and flexible. I agree with you, because when we are talking about export compared to French companies have been able to, and SMEs have been able to deal with large multinational players which are French, which could help them. And that was not the case for the Italian companies. So each time we look at Italian companies, they had to find some ways to enter into other markets, and not through large national players, large Italian players going abroad, but through other ways. So probably more agile, that's very clear. The family-owned business is a key characteristic of the Italian market, but it means also that for us, private equity people, it creates a lot of opportunities in terms of entry points, on the first thing. On the other thing, it creates also a lot of additional work in order to structure the businesses. Because we are entering in companies with a lot of family members. When we say a lot, sometimes it's really a lot. Could be like around 10 to 15 family members. So you need to really structure the business in terms of management team, in terms of processes, and that's fairly different compared to the company we have in France. I would say that last but not least, the Italian market is still a primary market. So it means that basically when you acquire a company, even industrial, you don't do a lot of secondary deals. So we need to make sure basically that we are able to find a trade buyer at exit. Because compared to the French market, which is in majority a secondary market, the Italian market is still fairly different. So you need to be cautious when you acquire the businesses about the family members. You need to be cautious during the investment period because you need to structure well the businesses and at exit. Last but not least, the processes themselves is very different. I mean, you cannot compare. I'm looking at the deal flow of my French colleague on us. We have companies which remain in our deal flow for 6, 9, 12 months. Because basically, between the first meeting and the deal, you spend almost 1 year and 1 year and a half. The processes are far less intermediated, but it's more complex to get the information on the other side. So you have more pure information because you don't have information based with vendor due deal, business, financial, whatever. You have more pure information on one side, but it's more tough to get it. Then once you get it and you do the deal, yes, it's true that value creation is probably higher because you enter at lower multiple, because you have a lot of stuff to do and to help the company growth. And Italian entrepreneurs are really more than French entrepreneurs willing to have funds at their size to help them grow. So yes, it can be a very, very attractive market, but again, with the particularity that you need to be local, you need to understand the market, because the market is very, very particular compared to other markets.
Okay, thank you. But we are different, but we can co-invest, we can cooperate as a part of the business model also. We can do a second round table, so we're on time. Okay, we start again with Matteo. We can speak a little more of add-on strategies because you contribute to the paper of the association that we present next month, more or less, about the add-on strategies. So if you want to say some example like value creation.
Well, again, it's something that everybody here knows very well. I think that we might highlight a couple of points. One is the dimension. There is an incredible offer of potential add-on acquisitions, not only in Italy, which are much below in terms of size than what normally the financial sponsor can have a look. That's something that we see a trend in the market. The trend is that there are still a number of small companies. When I talk about small, you have to be careful because when you talk to a US investor, for them, small mid-cap belongs to $500 million. When you talk to Italy, it belongs to 20 or less million euro revenues. And those corporates that might have a very niche product or niche segment where they are profitable, but they understand very well that they lack the presence and the organization. And if you stay in that niche, it's very difficult to grow. So the strategy that I think that most of us, most of the GPs are deploying in Italy is to consolidate the market. The first and foremost priority is to consolidate between the same area. Typically, we do have what we call the district, that are the regions or provinces where there have been a development of a specific product, a specific manufacturing activity. Consolidating that creates a little champion, somebody that can do the same job, the same product, maybe can have synergy in cost, but most likely will have synergy in sales. Being able to hire more people and being able to attend in the same week Shanghai Fair and the meeting with a customer in the US, which is forbidden, is prevent for the small companies. What is the second part of this strategy, the buy and build that everybody knows, is in our view also a way to hedge the risk. Because by adding small corporates during the life of your investment, naturally this brings the possibility to shape a little bit your footprint, whether it's an industrial footprint, because you can add manufacturing capabilities that you don't have at the very beginning, or whether because you can add other factors, presence, geographical presence, you can add people, you can add the ability to serve on a vertical approach your customer, not only with your product, but also with some services, which are positioned above or below in the value chain. And that's something that we have been doing in the last 10, 15 years more and more. On average, in our portfolio, we complete 3 add-on acquisitions for each platform deals that the fund has performed. But it's important to say that there is a last feature that we find very attractive, which is we have been funding all the add-on acquisition. We talk about 40 add-on acquisitions, always with internal cash flows. We never had a share capital increase to fund that add-on acquisition. So in a way, it's also a way to optimize the financial structure of our corporates or our portfolio companies. And this is something that across the years, during the ups and downs of the market, has given us the ability to stretch the leverage at the very beginning when we enter into a platform, and then use the cash flow generated across the years to be reinvested in the business in a very prudent way. Because if you think of this add-on acquisition, at the end of the day, when you enter into a platform, you have an uncertainty, which is a given. You can reduce it by doing due diligence, by studying or knowing the segment, but you cannot avoid. Once you are in and you have a management team running the business, doing add-on acquisition is much easier. The business due diligence on an add-on acquisition is by interviewing your colleagues. And most likely you get the real information you need. You don't have to rely on a third-party consultant, which might have an incredible knowledge of the market, but might lack of the specific knowledge of that single corporate, that single entity. So all in all, we found very attractive to complete this for the reason that I mentioned: consolidation of the process, hedging of the existing footprint, leveraging or optimizing the financial leverage and financial structure of our investments. We continue.
Yes. So buy and build like a good strategy also for the future. And concerning the future with Raffaele, it's not easy. But do you think that next generation EU, all the capital coming to Italy, can improve also the attraction of country and so on? If you want to speak.
Am I obliged to answer this question? It's difficult, but I think the future years can be interesting. But I think we should bear in mind that an entry multiple for us is an exit multiple for somebody else, isn't it? Is it right? So when I say I'm paying 6 times EBITDA, I'm generating an exit either for a family or for a fund or for somebody else. So we've seen in 21 surging entry/exit multiples. And indeed, I mean, as a Fund 4, we have, in our recent exit, we have benefited from a sizable component of multiple expansion, bearing in mind the underlying company was doing well anyway. But I think that will end, and multiples are second half of the year and towards the end of the year in particular will be going down, and the reason is the same: fear, uncertainty. I mean, we don't know how 2022 accounts will close. We don't know how to create budgets and multi-annual plans 23 going forward. Costs, sales outside Italy, markets who are blocked, I mean, a number of things. So multiples will go down, entry multiples will go down, exit multiples will go down. Giusto? We can buy cheaper, but we'll be forced to sell cheaper unless the company has totally developed into a different object, and that's also our job. Holding periods will get reasonably longer, in my view. They will go back to traditional private equity business, which is developing, achieving 2.5 growth in a 5-year time frame, and not maybe 3 times growth in 1.5 year time frame, which is totally unreasonable. You cannot change a company drastically in 1.5 years time, or even 2 years time. And I think investors should be understanding that kind of pattern. But we have gone through many different cycles. I mean, we have started with the internet bubble in 2000. We've got the systemic crisis 08, 09. We got the double dip, the sovereign debt. When was that? 11, 12. Then we got the pandemic. Then we got the war. Then what else we're going to deserve? So, but we need to adapt to cycles, and we need to be resilient to cycles. I think Italy is, on that point, is very strong. As regards the fact that our government will get the money, I think they will get the money, but the point is not getting the money, is implementing spreading the money on a disciplined and meritocratic basis across the country. And that's far more difficult, but then we'll see. I mean, that's not a question for me. Thank you.
Yes, thank you. We have ready many proposals for the new government to invest like a private equity investors. So we will collaborate with the government, we hope, to get the results. And Anna, how you support, how to support your portfolio company? Always dealing with the stability. For example, ESG factors. What is the role of ESG factors? Which strategy do you suggest?
Okay, thanks, Alessandra. So as I mentioned before, we are focused on small companies, so basically with EBITDA between 3 to 7 million euros. And the way we try to support them is, for sure, our key point is we try to be very concrete. So we tend to, as Arthur was saying before, we tend to spend a lot of time before make the investments, but is not a wasting of time, is the best way to create the right relation with the entrepreneur and the manager of the company. As also all the panelists mentioned, we are talking about a family-owned company. So most of the time is first or second generation. Most of the time they are not supported by structured advisors. So we tend to spend a lot of time speaking with them, listening to them, and to try to get the right relation. That is a fundamental way to work, because in the past month, in which some of our portfolio company faced with a huge increase of energy, for example, they were absolutely open to speak with us, and we are absolutely present with them. So basically, we spend more than 1 day per week, in particular in the initial phase of the investments, the holding period, because we want that our manager, our entrepreneur, because we usually ask them to reinvest together with us, feel the fact that we are not just shareholders, financial shareholders. Absolutely, we are not financial shareholders. We tend to help directly our entrepreneur or our managers. Our payoff is connected by nature, the payoff of entangled capital. We don't want to be naive and thinking something that everything is easy. But for sure, in our experience, the fact to be really close to the people we work with is key for them to face with this kind of fears that also Raffaele was spoken about. And the fact they can rely on us. So we don't substitute them in the daily activity, but they know that they can rely on us for every single aspect. So since the very to deal with the banks till the very small aspect of the company. You mentioned the ESG. Of course, we adopt ESG criteria in our investment process. So we run ESG due diligence before perform every new deal. And sometimes we have been surprised by the fact that the company, even if it's a small company, even if it's a family-owned business, is very prepared. Or is already the company has already implemented some activity, but they are sometimes they don't know how to communicate this kind of thing. For example, we have a portfolio company that's producing pots for flowers, for plants, only made with recycled plastic. And this is one of the key aspects of this company. And when we first we met them, they were not. Of course, they were aware, but there wasn't the key aspect that they underline. And another ESG activity that we are implementing that is supporting our portfolio company in these times is, for example, solar panel. In one of our portfolio company that is using energy a lot, we put the solar plants, and now 1/3 of the energy is produced by our solar plant.
Interesting. So we have to be present with companies to be near to them. Thank you, Anna. And Alessandro, how about your partnership with entrepreneurs and in your investment practice, what are the elements you focus on approaching entrepreneur? Some flash.
Yeah. That's a good question. So as was said before, again, Italy, it's a big market for family-owned businesses, and also us, notwithstanding the size of the investment, most of our investment relates to family-owned businesses, and then in which we make partnership with entrepreneur. Most of the time, what we stress, which is we think is a bit of a unique selling point, we are a global firm, and that's something that is really appreciated because we can offer immediately a network that spans from US to Asia to all the vertical needs that the company might require, long-standing practice in ESG to cover all the needs, and then all the necessary operational improvement activities, any supply chain issue we probably have already seen in other 10 portfolio companies at a global scale. So that's something that you immediately initiate a dialogue on something that matters for entrepreneurs. But on the other side, we can really offer an understanding of the family needs through the heritage of our firm, that it's a family tradition for more than 100 years. So that's something that is really a unique selling point that entrepreneur really appreciates. So they have always the feeling, which is inherited in our way we do business, of having to deal with a type of a family approach. That practically means having always an angle that it's more entrepreneurial than purely financial. That means lower approach to leverage. That means that we can go for longer investment period if it's needed. That means that we can manage complexity that always, or most of the time, a family seller has they have like a son or a daughter that they are involved in the company, or they need to manage, or they want to reinvest in a certain way. So there's a lot of complexity around a transaction with a family. All the points that were rightly said before, and then so managing the complexity around the transaction is one of the key aspects.
Thank you, Alessandro. Yes, the good feeling with the entrepreneurs is important. And Arthur, what your plan for the future? You have something to say to us?
First, plan for the future is to stay in Italy,
product,
to make things clear, because the market is
conclude.
fantastic, on life as well.
Equity.
Sorry, is it working right now? Hello? Okay, so my plan for the future, I was saying, is staying in Italy, of course, because the market is fantastic, and you have a lot of time to do. But apart from that, no, I think first the plan is very simple. It's about diversification, because as we mentioned, we have had COVID, the war, the energy price, etc. So we all know that we can have a lot of different impacts that can get place in our portfolio companies. So it's very important for us to be as diversified as possible. That's the first thing. Second thing is that since we have a lot of uncertainty, all of us in the room, about the macro for the end of the year or next year, of course, is trying to invest in the cyclical sectors and probably niche markets. Matteo mentioned buy and build strategy, of course. We just acquired a company in the dental business doing dental distribution of product equipment to dentists, with a classic buy and build strategy to consolidate a sector. We also did another investment in France, by the way, in the leisure business, in the bike industry, also growing market and probably a cyclical market. And last but not least, ESG, not only, of course, as a kind of key theme for area of improvement for our portfolio companies, but also as a key market, because this is one of the few markets where you have a very strong, let's say, developments forecast over the next few years, at least. So probably with a few up and downs, but we have a clear visibility about potential market growth of these segments, of all the businesses related to ESG. We just invested in Zato, which is building machines in order to recycle metals. And clearly, for this company, of course, we will do our normal job to try to help them going abroad even more than what they are doing today. But apart from that, we are sure that we'll be pushed by very favorable wind in terms of market growth related to ESG.
Perfect. So thank you. We are perfectly on time. So we are resilient, we are flexible, so invest in Italy. And we can conclude. Thank you for coming.